Hello, we are live.
Hello,
Fantastic.
guys.
I wish we could have done this in a different situation, but this was important, I know, for us to come on live, especially Gil, to kind of speak to everybody and see how everybody's getting on, because it's been a very crazy weekend for a lot of people. A lot of people have had a lot of opportunity from my funded my funded Forex funds, MFF, and I think it's important for us to go through and give a little bit of clarity on everything that's been going on. So, Gil, thank you very much for taking the time to do this for everybody, and we'll let
Of
everybody
course.
come into the stream, because I know there's a lot of people that have been waiting, and we want everybody to have the opportunity to ask their questions and go through everything. But Gil, do you want to just talk a little bit about what's been happening over the last couple of days over the weekend, and then we can get in and we can
Yeah,
speak about
absolutely.
some of the main questions and clear things up.
Mhm. Thank you, Alex. Yeah, it's been a very busy weekend starting Thursday night since we start getting all the rumors and the vague announcement by MFF.
Yeah,
And then started all the rumors, the commotion, and we feel that during this weekend we went on Twitter, on X, and we get so many questions by so many people, and we feel that the amount of confusion and the curiosity about what is behind the business model of the 5ers and the proprietary trading space in general is it came to be something that is crucial and very important for many. And we hear a lot of discussion, we read a lot of social networks discussions, and it's just we feel that maybe it is time for us to step in and help everyone calm down and pretty much understand. So what we are trying to do today is we're going to address your question. We ask a lot of people. We ask you in our post to send us your questions so we know
correct.
what worries you, and we're going to address this. We want it to be fully transparent and to talk as much as possible about the business model in principles. We're not going to reveal specific numbers and talk into the details and the specification of the 5ers. But it is important for us, for you to understand and feel comfortable and fully understand what kind of business you are partnered with when you're trading with a proprietary trading and in general, and with the 5ers in particular, because
Yeah,
we feel that the 5ers represent something more unique in this general space, and we'll talk about this as well. So
yeah. I think it's a long time coming as well, because with so many people running into this space, because this space gives a lot of opportunities both for the trader and for the people that are obviously running different types of firms and different types of models of firms. So there's opportunity for a lot of people. So I think it is, I'm happy that we can get to clear things up. So what I'm going to do, on Twitter, we asked a lot of people for some questions. I've taken those questions, I've put them in for Gil, and then afterwards, once we've got rid of most of those questions and we cleared everything up, then we'll go and have a look at some of the other questions that we might have missed out.
yeah, but before that, Alex, I would like to maybe take 1 minute
Go for
to
it.
make a proper definition of how we see a proprietary trading fund operates, because
Perfect. Yeah.
um, we've been uh, the pioneers of this Forex proprietary trading. Actually, I don't really like the definition proprietary trading. I think we are funding traders. Proprietary trading has a total different meaning, but since it was taking for our industry, let's just use it. Um, um, but anyway, I want to, when we started this business, what we had in mind is that we want to create a fund and around the fund, and this is how we operate until today. And so we are created a private equity fund, which is our resources capital, and we are seeking talented traders to work for us as contractors. So basically, the relationship that we have with you, the traders, is once you are funded, you are actually the ones that giving the service, not us to you, but you are giving the service of being traders for our capital. We are the clients. We are your client. This is why we pay you. And there's a huge misunderstanding about what is the proper relationship between a prop trading fund to its funded traders. And I'm saying this because this will explain in the next hour or so, where we answer some questions about the model, why we're doing things in the way that we do. And that will, I think, is going to make more sense than it is for now. And it will take off some confusion that most of you are facing. So basically, we are fund. We're looking for talented traders to work for us. We've created an online platform for you to come and take the opportunity. That's the way it works.
So going off that, because I can add a little bit more, because that was actually the first question. First question was, what is the 5ers business model? So we kind of got into that already. I'll even put it up here because that is the first question. But the way that, especially I've been here for 2 years, I've seen the 5ers grow, and I was looking from the 5ers for many years before that. And at the start, when we are looking for traders to become funded traders, they are kind of the clients at the start. Mm-hmm. We give certain programs to fit a certain style of that particular trader. But once that trader has shown that they are profitable, that's shown that they have an edge, the dynamic changes a little bit, because then we are kind of relying as well on that funded trader to continue with their edge to make profits for the company as well. So it kind of is, it's kind of both ways, because traders, funded traders, provide us with a service, but we are also looking for traders, and they're kind of our clients as well, in a way that we're providing opportunity and they're coming to us, and so on and so forth. But it's good that we cleared that up in the first thing, so everybody knows actually where everybody stands. One of the biggest things, I think, that the situation with MFF was the fact that they were running a brokerage or something in the back end, that the front was a prop firm. And one of the biggest questions I'm getting on Twitter, Gil, and I've told you about this all day, is which liquidity providers, who's your liquidity providers, all of this stuff. And before we get into that question, the model that MFF were running is very different from the 5ers and the model that the 5ers were running. So we've got to differentiate. These are two different entities, and especially with other prop firms or other funding companies in the industry, what was going on with MFF is not a direct reflection on what is going on with these other companies and with the 5ers. So that's another thing before we go into. But when I ask the question, or when we get asked the question, who is your liquidity provider, Gil? What can we say to that? What is your answer really to that?
Yeah, for a very long time, people do ask us who is the broker behind the 5ers, and we always say that we're using multiple liquidity providers, and usually we don't disclose the names because it's our business edge. We have a very unique relationship with all these top tier liquidity providers. They are prime of prime brokers. They are highly regulated, but the reason that we work with this, and maybe it's worthwhile to take a minute and explain the two models that were created in the past years in our immediate space, where companies that are working under the definition of online proprietary trading for Forex are working with. And there's I can distinguish two types of companies. The ones that have all the sophisticated technology for working with multiple streams of liquidity providers, and the ones that working with a singular broker. The ones that working with singular broker, what they do, they actually assign their traders into the infrastructure of known retail broker. And by that, they have a very little control in how they manage risk for their own fund, which is reflect in the terms and that they can forward to their traders. The more classic legacy way to manage a fund is to have a pool account where you take all your funded traders into and give them the permission and allocations to submit traders on the fund behalf. And it is the fund management policy algorithm discrecy to
the risk management team.
To execute to whatever liquidity provider out there. So it's very complicated, and there's a lot of tech. I
can kind of make it a little bit easier.
And technology involving this that we always work on it, but at the end, we are able to aggregate all these feeds and give the best of breed condition for any tick. So every time a trader of ours submit an order, he would get the best price, the best spread, the best execution, because we know how to route the order out there. So there's a lot of advantages to work with a company that do have this kind of technology. And I know that people would fear that if a company has control over the technology, they can do stuff like MFF used to do. So I would like to address that. At the end, when you are working with any partnership, it's about trust. And we're trying through the years, and we're 7 years in this business. What we care most is the trust and the relationship. We know how easy it is to be burned out by the discussion out there. We very much care about this, and we always monitor what's going on conversation out there. We are very aware and take it very personally when we have people unhappy with our services, if we have some flaws. And so it's mainly a trust issue. And so I cannot evidence on myself. It will not be fair. But if you go back and read the reviews, the happy and the unhappy ones, you will never see people claiming about slippage, which is something that is very noticeable. If we would play with the conditions, it would be very noticeable.
So I want to hold you back, because you're answering all of the questions that I wanted in one go. Like every question that I have, you're answering absolutely everything. So I want to pull it back for a second, because we're talking about the liquidity, and this is something that is really important for the people. So I just want to make sure we have many liquidity providers. We don't give all of the names of our liquidity providers, because that is the business edge of the 5ers. Gil, from the time that he founded the 5ers, has been building up relationships with many different people to get and to negotiate some of the best conditions that we currently have. If you go into the 5ers now, go into our website, go scroll down to the bottom, you have access to an investor, an account where you can see the spreads any time of the day. Now, we can only do that by having access and aggregating so many different liquidity providers to provide us with the best quotes at the best given time. If you just have one entity, like a broker that is coming through a broker. Obviously, they do the kind of same things as well with liquidity providers, but you are stuck with that particular broker. Then the liquidity, we get the quotes, we get everything, and then from there, that's where you get your execution, and it goes to our risk management team that they balance the books and they are able to keep the fund healthy. Now, this goes into the risk management more side of A book and B book. So I know everybody is shouting A book and B book, and I won't put words in Gil because Gil obviously would talk about this, but when you are a funded trader at the 5ers, you are going into the overall account, which is then the overall book of the fund. Now, Ruben and the risk management team here at the 5ers, which I'm always bugging them and always talking about them, so I can talk a little bit about this, is the fact that they have to balance the book. So that's hedging. That's also if we see a trader that is in a really good position, we may even go 150 or even 200% with that trader. So we can actually make more money on that particular trade. Some traders are different profiles that we can't go 100% into the market with them. We have to hedge or even put only a small. There's very different complex ways of managing risk on an overall book. And that's where it's not as easy as saying this person's on A book or this person's on B book, because it just does not work like that. You have an overall book of the fund that is managed by a group of people that do a very good job of it, actually. But that goes to say for you, Gil, are traders using or trading simulated or real money when they're going through the 5ers? Because that's the question that a lot of people are going to be asking. And that's one of the questions that I have here.
It's clear as it sounds. When you're funded, you trade true, real funds. That's it. It's as simple as that. There's no, it's ridiculous to say that you would trade simulated money. Well, it's
in the evaluation, of course. Now, we have many different programs at the 5ers. And sorry, I'm taking this over, Gil, because this is obviously your time to Jess and stuff like this. But it's important for me to say that we have many different programs in the 5ers. You have the hyper growth, which is the flagship, that this is what you brought to the industry. When FTMO came out, they came out with 2-step, all demo, and the 5ers came out with the instant funding, live accounts, which you go through the evaluation phase. Now, we then came out with Bootcamp, which the idea from Bootcamp is because we were seeing so many new traders coming in that didn't really know that we were doing. We wanted to give them a cost-effective option for them to practice trading whilst getting funded. And that's why it's a 3-step program. That's why it is so cheap as an entry fee, so they can actually continue and get funded while they're practicing. They only pay the main fee once they've actually completed everything. And then it takes it to the high stakes, which was our contribution to the competition that was already out there. Now, when people are talking about statistics and things like this, we have the flagship program, which Gil will talk about, which only really experienced traders go onto that program. And that program is a live funding. You do the evaluation and then you get fully funded, but you get the profits from day one. That is totally live. But all of the other accounts that we have at the 5ers, those are there to evaluate on demo, to see that you have an edge, that we can benefit from that edge when you go onto the funded account. The reason why people have commissions, the reasons why you've got spread, is because you need all of those things to see if the edge that you particularly have is an edge that works in these particular conditions. If we take a trader, Gil, we take a trader and we put them with certain conditions and then change it in a funded account, then we might see that the edge is no longer working, and then we basically
trading cost is part of the game. Trading costs need to be considered when you trade. It's part of how you manage the asset that we give you, the resource. Yeah. So you can avoid it. If you want to showcase what you're able to do, you need to simulate everything, including the trading costs.
Yeah, and I don't know what, because I know you've read the document as well, Google MFF. They're a little bit out of touch with our industry. It seems like they don't know what our industry is about at all. And you can see that by they're talking about drawdown levels, and they're talking about we're putting things on traders that's how the funding industry is. So what do you think about that with regards to the regulation and the documents and everything that came out for MFF?
Yeah, first, when I read the documents, it's clear that they don't fully understand the business model. They see proprietary trading environment as something that is bypassing the brokerage service providing. So it's like they look at this more as and I think companies also present themselves like so. Like they would offer brokerage services with a layer of proprietary trading, and this is wrong. I think proprietary trading, and this is our approach. We are a fund. We're looking for traders to work for our fund, our capital in that fund. We're not reselling brokerage services. This is why we are not putting our traders into any specific broker, because we have our own pool accounts and execute the trades from that. So it's very clear and seen that the people that had composed that paper on the prosecution for MFF, they are looking for all these similarities of operating as a broker, but it's obvious because they also were operating a brokerage business. But when they were discussing the layer of the proprietary trading on top of that, they were amazed to mention they have like the 10% drawdown, which is designed to fail traders. No, it means that MFF wanted people to rig their risk to up to 10%. And I think that's right, but it's clearly showed that they don't fully understand the business model. But having said that, I think a lot of people coming to this space as client, as traders, also don't have the right expectation from what kind of service they are receiving from proprietary trading fund. They looking for this as an alternative for a broker. They expect the proprietary trading fund to give them a service like if they were depositing their own money on a broker. They expect service. They are the clients, which is not true. It's very important, and this is our opportunity to stress this out to all these tens and thousands, dozens of thousands of new people every month coming to this experience of prop trading, to understand that proprietary trading is a fund. You are a candidate for trading the fund capital. Once you pass the audition, you are the service provider, not us. Okay, but we provide the platform, so you have some rights in it.
I know a lot of people are still hung up on the liquidity provider. I can see it in the comments and things like that. Now, Gil, I know that you've built those relationships up for a long time, and I know you're very proud of those relationships, and I know that is the business edge. Can we disclose one or two or even three of any of our liquidity providers, just so it can help people and clear things up with
of course them? Yeah, we'll discuss this before, and we know that people worry, and because of it's special times, we were willing to disclose who we work with, and in some cases. So a few names: it's Interactive Brokers, Saxo,
Saxo Bank, that is.
Saxo Bank, yeah, ICE Prime, and we have more. We work with 6 or 7. We always have some rotation. We take some, we bring some in. It's always it's a dynamic thing. So we have more prime brokers that we work with, but these are
all regulated brokers, just to make sure that people that may not know them.
Sure. Yeah.
Everybody in
these
trading
are prime brokers, just providing services to institutionals and commercial clients. Yeah.
And that leads us on to the overall thing is obviously where do we see the regulation going in the future? Because even though some of us have been in here for a while, the industry as a whole is still in its infancy. Prop funding and funding companies, it's still quite new in retrospectively of everything. So where do we see the regulation coming in? And let's say if we look in a 10-year horizon, where do you feel that that's going to go, and where do you think the 5ers fit in that whole span of regulation that's going to happen with the industry?
I cannot predict.
Big question. Big question.
I know what is my wishful thinking. I wish for regulation, not because I think we should be regulated. It's because at the end we are servicing thousands of retail traders coming to us as alternative. It wasn't the intention when we've created this this structure of business, but eventually we realized that we deal with a lot of retail traders at the end of it, and they expect service. And as service provider, we want to have some standards of ethics, and because it's a business of trust, like I mentioned before, it's very important for any regulator to come and protect the interest of the traders in this. However, having said that, I think it's going to be very complicated for regulators to step into this business, and just because of the reason of what is the business about. We are a fund, a private equity fund, and we have the obligation to do whatever we want with our resources. I mean, we can hire any people, do anything on our resources. It's our duty to be profitable or not. No regulator can tell us if we can invest our money in one way or another. Regulators are there to protect clients' money, clients' resources, so they will not be fraudulent. And the issue with MFF was mainly because they created this broker business behind it. And since we are not, it's going to be very hard for the regulators to impose regulation on us. And another aspect of this is that Wall Street and every financial district in every main capital city in the world, they have a lot of private equity funds working with their own funds and with their own workers. If they will need to regulate us, they will need also to regulate them. And there's no particular reason why they don't have the interest to protect their employees. So we are working with employees. You are, the funded traders are our employees by contract, by third-party contract. It's pretty much the same structure. However, because we are serving different scales of numbers of traders, and because the majority of our traders are intermediate and up in their skill level, this is why maybe a regulation should be considered, but it's going to be very tough to have the reasoning why to structure a regulation on this. So as long as the companies will not, I mean, we are not, but some other companies, I don't think they quite understand their own business model. As long as we're not bypassing and remarketing brokerage services like some do, then nothing is being done wrong, and then regulation will be hard. However, in terms of ethic, in terms of our dignity and the safety of our traders, I wish there was some kind of structure that will help us define a true ethics, a public ethic that people will feel more comfortable when they are coming to work with us.
there needs to be a little bit more, a bigger barrier to entry to the industry. And that's the issue that we've always spoke about, is anybody at the moment, it's a little bit like we have a little bit of a running joke at the moment in the office, which is a little bit running a Shopify drop shipping store, where anybody can open up, they can go and they get approached all the time, influencers, to open up shop, by people that can offer infrastructure at a price, and everybody's undercutting everybody, and they don't understand the base and the foundation that needs to be there to run a successful, healthy fund, to have a successful, healthy book, and to actually be able to go through the years and still be able to do what we're doing. And obviously, evaluations, people pay for the evaluations. You're paying to get tested, to then get funded. Now, we would love to find massive amounts of traders all the time that can come and get funded and to trade as funded traders. That was your dream. For people that don't know, you can look at one of the interviews Gil did when he was talking about the foundation where he founded the 5ers. The idea is you went with your friends to start up a small trading, come together, a group that you wanted to trade together, correct? You wanted to trade together and make money together on the markets, and to do it as a community. Unfortunately, half of your friends decided to get on with their lives and focus on something that wasn't trading. Maybe it was a little bit too difficult, but you took that and you went to find other people that maybe weren't in Israel, but they were in other places around the world, to trade with them. And that's how the 5ers was born about trading and building up community together. And that's losing a little bit my train of thought there. But at the end of the day, regulation does need to come in, just to make that barrier to entry a little bit harder. But at the end of the day, the 5ers, it's a private funds. These are funds that the 5ers have, that traders are contracted out to trade the fund. And it's very hard to regulate something like that, because we're taking a risk. You put that risk to build up the fund from scratch. Traders have come in over the years to trade and make money on the book for us. And evaluation money, which is the point that I wanted to get to, that does go into the fund. Not everybody passes. And that is a well-known thing, that the money that goes for evaluations, not all of the money, not all of the traders pass. And that money is a revenue stream as well into the 5ers that Gil will talk about as well. But we have an office, and I'll let you go into that, Gil.
I want to continue your line of thoughts about
okay. So
about the admission fee, where we get a lot of question about this. I think a lot of traders, they look at prop trading shops and they say, okay, they earn their money from the evaluation fees. And so there's few aspects to this. First, I don't know if you remember, Alex, like 3 years ago, we did a free program. We called it Summer Plan. Summer Plan.
That's crazy.
Yeah.
I can just for that.
We had overnight 10 times traders in 2 weeks than we had in a full month.
Yeah.
People, when traders come with no skin in the game, it's an issue. People don't have the responsibility to actually invest the time. We know trading is a hard time. Is a hard work. It's very counterintuitive. You need to be in the zone in a consistent way. Not every day you have the same vibe, the same mood, the same everything. You need to be very, very zen person to do it every day, again and again. And if you give free chance to everyone, you're not necessarily going to find the talent people. You're just going to get into your business a lot of noise, and a lot of people that will abuse the opportunity, and some people will be lucky and you don't know it. So first, people need to pay for evaluation. That's one thing. The other thing is that the evaluation phase takes about 80% of the efforts in the office.
Efforts is in, we're talking
much
about the efforts
resources.
is in time, resources, development, everything.
Marketing, everything, competition, everything.
Yeah.
And lastly, because people do pay for the evaluation, that allow us to create a better and more rewarding programs. Because imagine that if we would need to take the full risk with no backup, just forget about the commitment that I said about taking responsibility and not being fully risk free when you take the evaluation. Once you get funded with 20 times more than you actually paid, and the risk that we're taking on the traders are enormous. If we don't have that income at some point, we cannot give you the opportunity with the leverage that we give you and the initial balance that we give you. It's all come to summarize and into a calculation for the overall program with all the feature and objectives that we have in it. So I know some people have questions if we make our profits from evaluation, but at the end, first, and one more thing, it's very important for you as a trader to know that you are working with a company that is profitable, because if we weren't profitable, we wouldn't be here.
Yeah.
And you wouldn't have the opportunity. And then what you need to look up is what is the amount that you put in versus the opportunity that you're about to accomplish. And if you look at this, it's still a bargain. If you put the numbers, if you calculate the alternative that you have outside the proprietary trading space, then it's still a very bargain opportunity.
I think one thing that I want to add, and I want to cut you there, Gil, just because I want people to understand that the 5ers is bespoke in the way that we have teams of developers that code and customize absolutely everything from the dashboards to the websites to the system flows to absolutely everything. You've got teams of support. You've got absolutely so many overheads. We have an office. We have a lot of staff. And if we were relying solely, obviously, on trading, then we probably wouldn't be as big. But that comes in as like a big circle. At the end of the day, when we look for traders and they do the evaluations, if they don't pass, that goes to cover certain types of things of overheads. But there's many different things to make a business healthy, and Gil can probably back me up because he's the business mind here. But you need multiple streams of income. We have obviously the trading, which is managed, it's hedged, it's a very healthy book. We have the evaluations, and all of that goes. We also have partners with different platforms and different people, and it all goes together to create a mutual beneficial partnership with our traders and with ourselves. And I'm also a trader. Without prop firms, to make money in trading, you need money. And unfortunately, people have the skill in trading. They don't have the money, unfortunately, to optimize their skill to kind of change their conditions or to take them onto the next level. And I think prop firms are amazing for this opportunity. And people need to not look at what has happened with these particular companies, that they are in the US and in Canada, probably the worst places in the world that you can be a broker and not claim to be a broker. If you're doing that in the US and Canada and pretending to be something else, but really you're a broker, you're kind of asking for trouble. Now, I know there's a couple of questions. Go on, Gil. You go through that, and I'll read some of the questions.
I think we spend a lot of discussion about the admission fee because we have a lot of questions about it. But it's very important to say that it's not the business model. The business model is, after all, is to make profit with the traders, with the traders' skills, being able to leverage traders with more funds and to execute profits from skillful multiple traders at once. So that's part of it. We are able to also, because we have risk management and because we have our proprietary technology with our pool and bridge, is to optimize our profits. And the more sophisticated that we are, the more professional that we are in our risk management, is helping us to be more profitable. So the more profitable we are able to be more competitive with other companies offering. So this is a very complex business model where you have many streams feeding you, and also taking in consideration competition and pricing, entry pricing for traders, so they can enter and start trading in a cheap way. I wouldn't say cheap, but in a very comfortable cost, and become very, very soon risk-free traders, and they are able to multiply their potential as they show consistency. So that's the basic thing. And so this is why we also massively invest in content, in education, in mentorship, in additional resources. And I think we proved that over and over, that we want our traders to be profitable. We are planning to invest in this, in the education spaces more and more in the upcoming year, because it's our best interest that our traders will be more consistent. I think we are the only company that actually have psychology course and consistency course, and all these courses about the mentality challenge, the mental challenges of what it is being a trader, about risk management. I think nobody were talking about risk management before the 5ers had mentioned this and invest a lot of content around it. And we believe that risk management, no matter what your strategy is, risk management is the king, is what will make you from a struggling trader to a profitable.
And that goes to say on our side as well, risk management is the same. The reason why there's drawdown amounts, the reason why you have pauses and things like that on live account, these are the reasons we have to do our own risk management on an overall book. So when traders come in and they're only thinking about that, they're only thinking about their account, which is 100%. That's what you should only be thinking about, your account and only your trading. But sometimes we've got to just take ourselves a little bit out of the picture just to understand what is happening on a macro level. And your risk management is the same as our risk management. The way that you hedge your trades, the way that you put a stop loss in, the way that you look at all of the different trades you have open and see what you need to cut or what you need to do partials, it's the same what we do on a macro level for an overall book. And that's why it's so important that people understand that. And I've got this one thing that I want to say. They will never let us win. They win when we lose 100%. That is just not true. And that's the misconception at the moment. People are thinking that the prop firms are out to get you. We're out to make you fail. We're out to just cough up all of these evaluation fees. I'm in meetings every single day with this man here, talking about how much we need to do with education, to helping traders, to do programs for traders non-stop. So for us to get comments like that, I wouldn't say it's a little bit, it hurts a little bit, because we put so much time to make sure that we are doing best by the traders. Evaluations, goes without saying, not everybody is ready to be a funded trader yet. And we do everything that we can, negotiating the best spreads, having the best execution, with all the courses, with many different things, giving people credit. If you go into our community now, you go onto our trust pilots, you speak to traders of the 5ers that have been with us for 3-4 years, and ask them what it's like to be a trader for the 5ers, I promise you will say it's the best thing that they've ever done. And I speak to traders all the time. So when I see comments like this, it is just not true. And that's what we've got to see. We're looking for opportunity as much as you're looking for opportunity. And we're all traders as well. So I'll let you continue, Gil. I just wanted to put that, because I saw
Alex,
that.
I just want to say one thing about what you said, and
Go for it.
I know you do on your success team. You face this question every day, and I'm facing this question every day since inception in 2016. It's a question that is repeating itself always, and if somebody feels that we're here for his fees, just don't come. I think it's basically it boils down to trust. If you trust the organization you work with, it's okay. If you feel more comfortable trading with a broker or with a different prop shop, that's it for you. I mean, if you feel that the company just going after your fees, and you feel that they're failing you, don't come. It's building up the trust. This is what we are up to, and that's it. It's very hard to persuade somebody that that we're good or not. It's very hard when people come with the approach they're after our money. Of course, we want to do business, and it's no secret. Some part of the revenue is from the operational fees, which is the admission fee. It is okay, because we put a lot of people and a lot of effort. It's a business, and I think that's when you buy anything from anywhere, and when you take service, you pay them so they can be profitable and give you more service. So there's no shame to that. And at the end, you need to ask yourself, what do you get out of it? What kind of potential, what kind of output you get from whatever you bought? So if you feel that you've been cheated, if you don't trust, that's your thing. Go where you can find trust.
Yeah, I gotta just back that up so much, because we're not for everyone. Our firm, our rules are what we have to put in place for our own risk management, for what we need to make sure that we are a healthy firm. If that is not good for your particular edge and your particular trading, that is totally fine. And we want you guys to succeed in whatever you guys do. If it's another firm, that is totally fine. And there are some really good firms out there. There's not just the 5ers, and I have to say, we're one firm, but there are other firms that are really good as well. And they have great people that are supporting, and they have great CEOs behind them. And if that's what you guys want, then that's fine. But we're here and we offer something very special, and we work very, very hard to make sure that you get the best out of this as well. We will go, there's a lot of questions. I can't catch anything. So I will try and find a question instead of just a general comment. Will this be a recording? Yes, we're going to keep that up there. Is anybody got any specific questions that they want to ask Gil? Because it's getting on to the 50-minute mark, and I don't want it to drag on too long. I hope we've gone through the main bulk of the questions that are coming through regarding all the issues that happen with MFF. 5ers is compete business.
I spotted a question. Somebody's asking if we're teaching. We have an extensive library of educational. In my background, I used to trade supply and demand and sophisticated price action. I teach that. You can find it in our website, and also you can find it in our YouTube channel, the supply and demand. I think we have 2 or 3 different series about this very subject, and there's a lot of good comments about it. For many, it was very game-changing thing. So it's not a trading technique. It's a reading and understanding the narrative of the market, reading type of thing, and it is complementary to almost any trading strategy that you're already mastering. So I highly recommend this. And we have a psychology course about all the psychological challenges that people facing, and many of them, you will be amazed how many psychological challenges you are not aware of that you're facing.
And Gary Dighton is
struggling, and if you don't know why you are doing the same error again and again, regardless the fact that you're aware of that is the wrong thing, go to the psychology course by we brought a specialist, Dr. Gary Dighton, who is a coach for traders, performance coach in the US, coaching the top professional institutional traders, and he was willing to give us the seminar, and it's recorded, and you can have it for free if you're trading with us. There's a scalping course by Saul. So we have an extensive education, and we're about to invest more in that. Sorry.
So one thing that I want to, this is a good question, because people don't understand why we have 10 leverage here, 30 leverage here, 100 leverage. People are asking about the 4 million mark. And we have traders up in the millions that are trading. We have a trader that only in 2 weeks went from a 20K evaluation to 640 with 80K profits in his account in 2 weeks on the hypergrowth programs. Now, we have great traders, and we have traders that are still starting off. The reasons why the leverages are the way they are: Bootcamp is a beginner program. We don't believe in leverage. Every time when the first time I came here, I was addicted to leverage. Came from crypto futures. I was talking about Gil, why are we not 100 leverage? And they told me straight away that leverage isn't what's going to make you a good trader. Now, Bootcamp is 1 to 10 leverage because it's a beginner's program. We don't want you to get used to the leverage. And that's why it's there. The hypergrowth program is for experienced traders that can handle leverage and can handle position size. That's why 1 to 30 leverage is there. High stakes is high stakes, high risk, high reward. And we tell you that leverage is high risk. And a 1 to 100 is, in my opinion, too much. But if you're a professional trader and you know how to use that, and you know how to get yourself out of bad positions, and you use the leverage for that way, then fantastic. Not a lot of people know how to use the leverage. And that's why the high stakes we put it out there as part of the competition. This is our offering. This is our 2-step, because people are asking for it all the time. They were at the 5ers for many years and they wanted the 2-step, and that's what we did. But it is a high risk, high reward program. And we offer many things on top of that, with the salaries that we offer to traders and many different things. But that's the reasons why the leverages are very different. Now, if you didn't want those leverages and you want to lower, just tell us. We're more than happy to lower your leverage. I lower people's leverages on such a regular basis. Some people have even wanted 1-to-1, we're more than happy to do that. But high leverage is something that at the firm, we don't really like high leverage, do we, Gil?
Yeah. And to add this to this, we measure our performance all of the time, and it's clear as summer skies that that when you have the more restrictive rules, this is where you have the higher percentage of passing traders. When we were practicing only the hyper growth program back then, and we've created aside to this the aggressive mode, we saw this very, very clear that the more restrictive you have on the program, more people pass, they perform more consistency, they last longer, and eventually, and you can read this on our Trustpilot in some places, where people were actually thanking us for giving them very restrictive program because they have just learned how it made them a better trader. People were actually told us, giving me that low 4% drawdown, maximum drawdown, made me a better trader.
Back then.
Yeah.
Back then. But
since then, we became more competitive.
And that's the thing. It's the craziest thing. The less guidelines you give to a trader, the more room that they have to make the mistakes that we all make as retail traders.
The more room to be confused.
Yeah.
To make errors.
The more space that we get,
guys,
it's like an employer. It's basically like an
scientific fact.
Yes, scientific fact.
It is.
It is. It is a fact.
If you want to be consistent, have specific rules and low risk.
I'm going to jump through some of these now because we are getting to the hour mark. So, are we banning Canadian traders? I haven't heard we're going to ban any traders from any countries or anything like that. We do our best. Our risk management do the best to allow every person and every country in. We have had in recent months an influx of abuse and an influx of absolute groups of traders that are exploiting. And the easiest thing to do would turn around and be like, okay, we're going to ban an entire country. And our compliance and our risk team work hard every single day to make sure that the opportunity isn't lost for those countries. And we allow all of those different countries to continue to trade with us. So no, Canada is still totally fine, and we have no issues with that, and we will never have any issues with that, I don't think. Could you share some of the statistics? Look, the statistics, hyper growth is, from my understanding, over 25% of the people that are doing hyper growth are passing. The reason for that is because a lot of them are experienced traders. There are other traders that have gone from boot camp, that got through many stages of the boot camp, didn't quite crack the boot camp, went on to hyper growth, and then passed the hyper growth. It's very, when we talk about statistics and things, you've got to look at your statistics as a trader. You've got to look at your trading, where your expectancy is, what your hit rate is, where your profits are hidden in your trading edge, and those are the statistics that you need to know. The noise of everything what other people are doing, you've got to block it out. And I'll go on a tangent if I carry on, but think about your statistics and not the other statistics. But on the hypergrowth program, one step is the best program in my opinion to go for if that was me.
Yeah, it's very easy for us to share statistics, and we don't do it as a principle.
It's not a marketing tactic.
Basically. Yeah, first it's just marketing, and then it's like the Instagram era where you look at other people's lives and you say, oh, they have wonderful lives, not like my gray one. And that's the thing about statistics. It puts you, it reflects for you bad standards that people feel that they are not right for them. And this is something that we always talk about in the 5ers. We want to create different aspects of success. So if you come to us and you are a trader that is not consistent and blowing up accounts, and we were able to help you out being a break-even trader, that is success because you are progressing. And if you were a struggling break-even trader and you were able to be profitable for a while, that's a progression for you, and that's a success. So if I show you that 25% passes the high stake and you're not, how is that going to feel? So because we consider ourselves being educators and being part of your progression process, we don't share it by principle, because we don't want to put a mirror and say this is the standard, and you're not under that standard. So it's that's the reason it's very easy for us to do this marketing.
It's one of the reasons why we get all the time, put your payout, the payout proofs on the Discord. And it is so easy to do that. And it just doesn't have any benefit to you as a trader to know what somebody else is doing. It can actually have the opposite effect. It can make you think, okay, and if this trader's making this much, you don't know what account he's on. But if you're on a 10K account and you want to make that money, and you start over leveraging and you blow the account, you revenge trade, buy another account straight away, blow it again. It is just a spiral that is not good for your trading growth. And these are little traps that brokers, or little traps, that things that they put onto retail traders to make them want to trade more, to make them want to risk more. Like, at the end of the day, it's all about that slow progression. And the shades of shades of success that Gil was talking about was that small steps of becoming unprofitable to becoming break even to becoming a little bit profitable, to being that great trader, to being the best trader that you could ever think of. And it's small gradual steps. You don't go from here and bounce to making 30-40K in a month, or
Success
even 2
is only
weeks.
relative.
Maybe 80K in the 2 weeks that we had.
Success is only relative to yourself. That's
Exactly.
the motto that you should go with.
Yeah. This is something I know a lot of people are asking. And what can we say to this? Like, we all saw slip them to hell. Like, there's nothing to say to it. Like, at the end of the day, it's a shame that you have bad actors, but unfortunately, we've got to know where we are standing in this industry. Is not just the prop firm industry, in the financial industry in a whole can be quite dirty. And when you are looking for a person to be friends with, or you're looking for a partner, you're looking for the people, the actual people behind the mask and behind the same thing. It's the same thing with the company that you're looking to get funded from. Find out who the CEO is. Find out who the people are going around and operating this company, and understand them as people. And if you feel like you can trust those people, then put your trust in them and see where it gets to you. Nobody could have known that there was manipulation behind the scenes, even though everybody said the slippages on MFF were really bad. Now we
say something about this. I want to add something about slippage, because you know, trading is technology, and companies have the ability to manipulate the technology, and but the good thing about it is it's very noticeable. If you sense that over and over, whenever you get slippage and you don't trust the platform, don't be there. Just it's very noticeable. Somebody is stealing from you. Somebody is trying to do something for you. But it's very important to understand that slippage do occur in true markets. I mean, if you are trading true market and you are having, and I saw this video by somebody trying to explain, he said something about there are different bands. If you have one lot, you have this slippage. If you have two lots, you have another slippage by technology. But when you put as your position is larger and you place it to the market, you will probably have a slippage, and slippage is a caused by multiple feel for your position. So if the bigger the position that you put in true market, you'll probably get many partial fills, and then you'll get the average price. So you will experience some latency in the execution and also some slippage. So you need to be very much aware and don't shout, "I'm being scammed" every time you get slippage, especially if it's on a real account environment. If you get slippage on a demo account, then somebody is fooling around with your system. But on a true live account, you may have, if you put a 001, you will not get slippage. But if you put huge position, you'll probably be subject to some slippage because of the partial fill until you get the full order. So be mindful for this. Not every time you're being scammed. However, if it's being systematically, like it was probably what happened in MFF, there was too many complaints about it. It's either their systems suck or they manipulate this on purpose.
That saying as well, around news, you can only get out when the market gets you out. And that's the thing when you're trading high impact news, NFP, CPI, anything, job report, anything like that.
Yeah,
the market will only allow you out when it gets you out. And
and rollover time. Rollover is the same thing. You may see quotes in price, but you don't have a feel for them. You can execute these at times when the volatility is very strong. Sometimes you'll see a tick, but you don't have execution for it. And so in news event and in rollover, in not standard liquidity environment, you may experience some slippage as well. It depends on how strong is the volatility. Sorry, Alex.
Nope. Well, look, it's been an hour. I know it's getting on now. I hope we've been able to get most of the questions. I can't go over everything because there were so many comments, and they're not really questions, they're just comments, and I think we've gone over most of them. But we hope that it's given a little bit more clarity on everything, a little bit more clarity on the industry, mostly more clarity around us. We can't really talk about other firms. There are great firms, there are less of great firms, but all we can do is just put ourselves out there and hope whatever opportunity that you go, if it's with us and you decide to come a part of the 5ers, then fantastic. If it's somebody else, that is more than great. We just want everybody to understand the last couple of days, and I think we've done that now. So Gil, thank you very much for taking the time to jump on with everybody and taking the time to sit with me. And there you go. Thank you very much, guys. We're going to end the stream now, okay?
Thank you, everyone.